Hey everybody, and welcome back to another video. This is How to Invest, checking in on a Saturday. I wanted to make this video because I saw some quite frightening news that I saw here on Yahoo Finance's YouTube channel, which if you don't subscribe or if you don't watch on a daily basis, I would highly suggest. They always have some type of useful information. I don't watch all their videos. I kind of look through just the title, see if it pertains to anything that I would be interested in. And generally, there's at least a couple videos a day that I'll end up clicking on and watching a decent amount on. But I was on a couple days ago, and I have yet to see anybody talk about this topic, and I was very frightened when I saw this. I have not watched the video yet, so this will be a live reaction. I wanted to watch it with you guys and kind of give you my thoughts and what I'm thinking. So the video here was U.S. companies are hiring and raising wages to attract workers. So let's watch it. I'll turn up the volume here. Get rid of this. Oh, sorry about that. All right, so I'll just butt in right here. This was essentially all covered in the video I released. I think it was called Market Crash, What You Need to Know, that I dropped maybe a week or two ago. And kind of the main topic in that video was inflation and the expectation of inflation going up and the fears around it just from the general population of people. And what I have kind of been intrigued about this video to start off with, they have yet to say inflation. They say raising wages and wages will increase. This is an inflationary phenomenon. Wages going up is inflating wages. I think that they are trying their best to not scare the market any more than it already is about inflation and get it spooked. So that was just one interesting thing I thought. But the second one is right on this graph here. The proposed minimum wage increase, which has been brought up, has been $15. That's over a 50% increase for many, many states. At least where I live in Pennsylvania, it's $7.25. That's over 50%. So if a great deal of companies have to pay their most abundant employees, because let's be honest, you'll probably have the most amount of lower paying workers in your company. You're not going to have thousands of people in your company making over $1 million a year. At least I would hope not, unless you're extremely lucrative. Maybe an Apple can afford to do that, but most companies can't afford to pay most of their workers, most of their high-end workers the most. They have the most amount of workers in the lowest bracket of wages or earnings. So for this to be a 50% increase in the majority of states, we can see here some of them are already 15 or even higher. I think New York is already 15, maybe California, but these are few and far between. And for 75% of the United States to increase their wages for the majority of their workers by over 50% would kill stocks in the long term if they were a publicly traded company, because wage inflation is the worst type of inflation for a company to deal with. Inflation of commoditized goods or just any goods that are involved in the production process can easily be passed along to the consumer, and the consumer will have more sympathy than saying, we had to pay people more money to work here. If you tell a consumer, we had to pay triple what we normally pay for all of the goods going into this, then they'll probably understand that they're going to pay along the lines of triple what the product is. But if you tell someone, I'm really sorry, we really have to pay people more to work here because no one really wants to work anymore. They just want to stay home, not get sick, and enjoy their unemployment benefits. You can't just triple the price and expect people to understand and be willing to continue to purchase your product. People are just going to say, I'll just go somewhere cheaper. Say, I'll go somewhere where people want to work and don't have this problem. Because this won't affect every single company, but it will affect a lot. And I would say the vast majority will greatly hinder them if this unemployment, or not unemployment, if this minimum wage bill does go through to $15. Now, I would highly doubt that this does. I've already seen proposals for it to be kind of a compromise, maybe somewhere in the $12.50 range, or maybe even the $10. I think 10 would be a great start, maybe even $12.50 if they're feeling quite generous, the Republicans. But this would definitely be a killer for companies to try and combat with. Let's listen to the
consumers, to put consumers in a better financial position. And so the government created the conditions for a private company like a McDonald's, like an Amazon, like a Chipotle, to then go have to manage wages for its workers. And the inflationary impacts is going to have a one-time increase. But after this, in theory, even if wages appear flat in this definition in still 10 years, we're still looking at folks who
It took about 1 minute 45 seconds for them to say inflationary increase. I just find that kind of a little bit disingenuous. I think it should be in the title. Wages inflating. Just that's what's happening here. Alright, so what I got from the end of that video was the man who talked for most of the video in the middle, I'm not sure quite his name, was definitely a big believer in support, providing monetary stimulus in the Fed's policy to companies and the market in general. He said that in the 2008 or 2009 to 2000 or 2007 to 2009 financial crisis that they didn't help out nearly enough, and that it took over 7 years for us to recover from that. And the only problem I have with that is we did try to help in a lot of these banks, and a lot of these banks chose to do stock buybacks and chose to reinvest in their company. So I kind of disagree with that a little bit. It was a completely different situation than in 2020, in my opinion. I think the system was very, very bent and out of place in 2008 and wasn't running correctly and wasn't running smoothly and had a lot of kinks in it that weren't supposed to be there. And they kind of had to be punched out, and there was going to be some pain. And it just had to be that way because it had been running the wrong way for such a long time. And since then, we have put in a lot of supports and into place so that it doesn't happen again, and that the 2020 crisis really didn't have much to do with financials at the beginning. It was a global health problem. It wasn't anything to do wrong with the financial system, banking, or housing. But that was just kind of one thing I disagreed about. But to wrap up this video, my big point was I don't really see many people talking about wage inflation. I think people talk about inflation, they talk about commodities, they talk about oil, which is a big part of the energy inflation, which we've been seeing, which oil could continue to go up. I've heard rumors that through the reopening that we could go up to $4 in many areas, which would be horrible for the economy and the stock market in specific. But what could be even more detrimental is wage inflation. If companies have to pay most of their employees up to 50% more, we are not going to see as much growth over time. It's just fact, because they don't have as much money to reinvest in their company. If you think about paying 50% more for 50% of their employees, that's a lot of money that they have to invest in the people in their company and not their products. So I wanted to make this video just to kind of warn you. I know that when I go to the mall quite frequently. Just a month or two ago, about maybe every other store, 50% of the stores within the mall were asking for help or said, we need more workers, we need help wanted. And now just about every single store in the mall needs help and needs workers and don't have people to fill these positions. Now, you may say that people just don't want to work in a mall, which could be a fair argument, but almost everywhere I go, companies are hiring, and they are not getting the workers they need, which is scary because they're going to have to pay more, which will, in fact, hurt their business. And nobody's talking about this. We looked at this video, only 600 people viewed this video, 632. None of the financial or even stock market YouTubers that I follow are talking about this that I know of. Certainly the ones that I watch. So be on the lookout and just be weary because this is going to definitely hurt the stock market over the long term. We've been hitting new highs pretty frequently on the indices that could change quite drastically if wage inflation is here to stay. If you made it this far, thank you for watching, tuning in on a Saturday, and have a great weekend.